Writing covered calls could be a great way to hedge positions, especially in a situation where the stock price could considerably decline. And so there is a fund manager who recently spoke about writing covered calls on his Microsoft position. And that's what I want to cover in this video. And so guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now, there was actually a well-known fund manager who came on CNBC and he spoke about writing covered calls to hedge his Microsoft share position in his portfolio. And what I really wanted to do is I wanted to first show you what he said about writing covered calls, but then what I wanted to do was I wanted to analyze that specific covered call option that he's writing using that free options tracker that I give to you guys absolutely for free, which you can get to in the description below. And so let's first dive into exactly what he said.
All right, time now to bring in our halftime headliner. We're talking Kevin Simpson, founder of Capital Wealth Planning. He manages the firm's 5-star fund. And Kevin, you're adding protection on one of your big tech stocks.
Well, you guys did a great job breaking down the tech earnings, especially Microsoft. And we look at these opportunities, these surges, and believe me, we love the name, but sometimes these multiples get stretched. So we're not going to try to time in and out of the position. But writing covered calls is a great way for viewers, for investors to hedge a position that may have taken, a meteoric run. And certainly Microsoft could be in that category. They had great earnings 2 days ago, another surging number yesterday in terms of performance. So we wrote covered calls yesterday on Microsoft. We wrote $320 calls. And could it get there? I mean, you mentioned AI, and it seems like everybody's pulse skips a beat. But I think this is an opportunity where trees don't grow to the sky. So if we can put a little bit of a hedge out there, if you own a position that's getting too much of an overweight within your portfolio, not a bad idea to trim into strength. But it's not a judgment on the name by any means, Frank. We're just trying to read the room.
And so he said a lot there in that little tiny clip. And so let's dissect that a little bit. So the surge that he was talking about was that, after Microsoft reported results, you guys saw me cover this on my channel, the shares absolutely surged. And so essentially what he's saying is that, trees don't grow to the sky. And there is a large potential, at least in his opinion, where the stock price could come back down. And so one of the ways that you can sort of hedge that is by selling a covered call. And essentially what that does is it limits your upside, but it gives you a premium, which reduces your cost basis. And feel free to download the options tracker and follow along with this. But what I want to do is, as an example, I want to show you guys what the $320 covered calls look like 6 months out. So this is the October 2023 covered calls. The C means call options, and then this is the date, and then of course this is the ticker. So MSFT, of course, is the Microsoft ticker. October 20th, 2023, and that's the call. And so it's the 320s, and notice the premiums around $18 per share. So you'll receive around $18 per share if you sell the $320 covered call, and you'll generate that over 6 months. And so here's what the options calculator will look like for you. And this is the covered call one, of course. And so you can see I did this on the date that the interview happened. And so that was April 29th. The price was $307 per share at the time. There's the exercise date, October 2023. There's a strike price, and there's your premium. So there's 174 days until strike, which means that the current yield, so the 18 divided by the 320 or 18 divided by 307, is going to be lower than the annualized yield because it's fewer than 365 days. So you have an annualized current yield on this opportunity of 12.29. And that's just your premium. But remember that the difference between the 307 and the 320 is actually $12.74, which I have laid out right here. So if you add these two together, your total return, if the stock price runs, is 30.74. That's your maximum total return for a total annualized yield of 21%. And so, is this a good opportunity? Is this a bad opportunity? Well, let's talk about that. So with covered calls, what you're essentially doing is you're giving up your upside. So anything above $320 per share goes to another party, and you're receiving $18 per share in return for that. So you're betting that the share price won't go past 320. Now, do you care if it goes past 320? Not really, because that might be the price that you would sell it at anyway, so you might as well just get the premium. And so that's a situation where this actually makes sense. If you're going to sell it anyways at that price, you might as well just collect some additional premium. And so that's kind of the reason why I think selling covered calls is actually not a bad idea, even if the annualized current yield is not like exceptional. And so here's the thing: if the stock does not run to $320 per share, he generates a premium of $18 per share, or 12.3% return annualized. And if the shares do run, he generates that 21%. Now, overall, if I'm valuing Microsoft at much higher than 320, I just put 320 here, so saying that the valuation or net purchase price as a percentage of valuation is 90%, but let's just say I was valuing Microsoft at like $800 per share. I don't think I'd want to sell this because the annualized current yield is not high enough for me to justify giving up that upside potential. However, if the valuation of the company is 320 and I'm going to generate 12% at a share price that I would sell the stock at anyways, I might as well take that premium. So it just depends on the valuation and what you think about the company's future prospects. And so the point that I want to make is that it's important to consider what the particular situation is for the security and what you feel the security's future economic prospects are before you start selling covered calls. I have come across many friends who've sold covered calls on securities and they sold them when the share prices were way too low and the share price ran, and they were really upset that they lost out on that upside potential, and they knew that the valuation was much higher than the price at which they were selling the covered calls at. And so be very careful in those situations. I selectively sell covered calls. I generally will only sell them at prices at which I would have sold the stock anyways, and so it becomes less of a yield type activity and more of a I'm going to sell this thing anyway, so I might as well just generate any premium that I can in this situation. And so the other thing that you might want to consider, and I'm going to show you this next, is that the situation with the company might actually change. So, you might have a valuation that exists today, but you have to acknowledge the fact that the inputs into your valuation might change and the company might be worth way more. For example, I'm going to walk you through the Microsoft revenue lines, and I'll show you where I might be seriously under forecasting the growth potential in the company. So here are the Microsoft revenue lines, and what it is this is what's available in the tracker. So you just log on to the tracker. If you're a part of the lower tier of the Patreon, click into Microsoft and it'll bring you into this large spreadsheet, and this is just a part of the spreadsheet, and this is the forecast 2023 and beyond. And so I've I said this in a previous video where I've linked this to what their guidance is for the remainder of 2023, and then I take a position on forecasting out the business. And so where I want to direct your attention to is the intelligent cloud segment. So I'm only growing that at 15%, and that's how I get to my valuation. But the industry is growing at a much faster rate than this. So if Microsoft is a major player in the industry, one of four major competitors in the business, I would say, with Amazon, Google or Alphabet, and I would say in China, Alibaba are the four majors. If the industry is growing at a rate much greater than 15%, then what would the valuation for Microsoft look like if I had to take this up to 25% because the growth continues to surge? And for Microsoft, it's not like their intelligent cloud segment didn't grow fast in the last quarter. It's still growing very fast. I'm just being conservative. So the point that I'm making is you also have to consider the fact that there might be a likelihood that you may be taking up your valuation. And so just keep that in mind when it comes to selling covered calls, because you might be selling those covered calls at a price that's too low or inappropriate for the particular situation. Now, just quickly, this is what the tracker looks like. So you can click into the individual company's ticker and then get into the model. And for, there's a ton of companies in here. Microsoft's in here, Apple's in here, Tencent's in here, etc. And so how do you get access to the tracker? Well, you can get access to the tracker on our Patreon at the lower tier. And, there's over 200 people that have joined us thus far. So please consider joining if you want to support the channel. Now, more specifically into Microsoft, if you actually missed the video that I put out where I discussed their latest quarterly results, I think it's very important because here's a company that's doing very well, firing on all cylinders in a year where a lot of companies' revenue is going backwards. And so if you haven't seen that video, you can get access to it right here.